All right, good evening, everybody.
Evening, sir.
You're welcome to class again. So we quickly look at this question on Mega Laboratory. So you can read, ma.
Okay. Mega Laboratories PLC is a successful manufacturing company in the pharmaceutical industry. The company manufactures a number of household drugs. Since the event of the COVID, its products have been in high demand. One of its newest products is known as vaccine the COVID. In order to manufacture the product, a single raw material, zithromas, is used. Budgets are to be prepared for the quarter ending 30th June 2021, and the following information is available for this purpose. At 31st March 2021, various balances were as follows: receivables 500,700, creditors, suppliers of Zitromas 153,000, vaccine the COVID 20,300 units, inventory of Zitromas 200,000 kilograms. That cost card vaccine the COVID as follows: direct materials Zitromas 10 kg at 5 naira per kg, 50 naira per unit. Direct labor 2 hours at 6 naira per hour, 50 naira per 12 naira per unit. Suppliers of Zitromas give 2 months credit to the company, whereas customers take 1 month's credit. Sales expectations for the quarter ending 30 June 2021 are as follows: 25,000 units of vaccine the COVID at a selling price of 95 naira per unit. Assume that sales of vaccine the COVID and purchases of Zitromas will be evenly spread over the 3 months to 30 June 2021. Depreciation relating to plant and machinery is 55,000 naira per quarter, ending 30 June 2021. Other expenses are paid immediately in cash and are estimated to be 200,000 naira for the quarter ending 30th June 2021. The anticipated inventory levels at 30th June 2021 are as follows: inventory of vaccine the COVID 15,000 units, inventory of Zitromas 150,500 kilograms. Assume there is no work in progress and that stocks of vaccine the COVID and Zitromas are valued at standard direct cost CII above. Required for the quarter ending 30 June 2021. Prepare a cash budget amounts for each required. B, income statement, any assumption you have made. C, briefly state the benefits of a cash budget to Mega Laboratory PLC. Sales are often considered to be a principal budget factor of an organization. Required, explain the meaning of a principal budget. Is assuming that is sales, explain how sales may be forecast, making appropriate reference to the use of statistical techniques and the use of computers. Thank you.
All right, thank you very much, ma. So looking at this question, the first thing we are going to do, there are various workings you must show for you to be able to navigate through this question. The first thing I'm going to show is the sales budget. The sales budget. Now, how do you get the sales budget? Now, from the question, the number of units expected to be sold is what? From the question,
25,000.
25,000 units. How much is the selling price?
95 naira.
95 naira. So your sales budget in terms of unit is 25,000. In terms of revenue is what?
25,000 multiplied by 95.
So let's have it. Solution. 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 So we have it. First, let's say sales budget. Sales budget. Under sales budget, units is what?
25,000 units.
25,000. Now, the selling price is what?
95 naira.
25 naira. Selling price
95, not 25. Okay, selling price 95.
The result is what?
2,375,000.
All right, fine. So you have it as 2,375,000. Hope you don't have issue with this one, right?
No,
You're able to get this.
yes, sir.
Let me show you this way. Production budgets. Production budgets. Now, in units now, the production budget in units. Now, your sales is what? You know your sales will determine every other thing.
25,000.
Sales in units is 25,000. Now, do we have any closing stock in the question? Any closing inventory?
We have closing inventory.
Yes. What is the value? See it here.
Right.
The anticipated inventory levels at started June 2021 are as follows. Inventory of vaccine the COVID is what? It's 15,000. You know, Zitromas is the raw material. Take note. So
Yeah. Okay.
the vaccine the COVID is the finished goods, and the closing is what? Is 15. The opening is what? See it here. Inventory of vaccine the COVID, because this is the opening balances brought forward from the previous month, or balances as at the end of March. So inventory of the opening is what? 2,300. So now it will be in this form. Add what?
Closing.
Add closing inventory. The result is what? It's 15,000. 15,000. And you add, you're going to have what? 40,000.
Yes.
Then what next? Less what?
Opening.
Less opening inventory. Less opening inventory. So the result will be what? That is 2,300. So when you do that, you now have what?
So I'm looking for a 20,000.
2,300.
Okay, 2,300. I thought you said, okay. 2,000.
See it here.
I've seen it.
Yeah.
2,300.
So your production budget in units will be what?
It is 20,000.
Production budget will be what? 19,700.
2,700.
Yes, 40 minus 2,300. You have 19,700.
Okay.
Isn't it?
It is
Yes,
19,700.
sir.
Then the next thing is to determine your material usage budget.
Usage.
Material usage budget. Determine your material usage budget. So you have it. Material usage budget. Material usage budget. So you have it as what? Now, your production in units is what?
25,000.
Production.
Mm.
Material usage budget. Okay. Your
19,
production is what?
19,700.
Fine. 19,700. 19,700. How did we get that? See it here. See it's production budget 19,700. So now we the material usage for material packaging for vaccine the COVID is what? How many kg do you need to produce one vaccine the COVID in terms of material? See it, direct material, zithiomas, 10 kg, right?
10
At what?
kg.
5 naira per kg,
Yes,
because that is the
ma'am.
raw material to produce vaccine the COVID. So the direct material usage, you have it as material used in kg. You have it as what? As 10, right?
That's
So the total kg
10
to be
naira.
used, the total kg will be used will be what?
197,000.
Yeah, 197,000. 197,000. So what will now be your material purchase budget? You know, this is usage. From usage, you move to purchase, right?
Yes, sir.
Material purchase budget. Material purchase budget. So once you determine your material usage, you now look at the purchase budget. The purchase budget, we have it this way. Material usage, based on what you've computed, you need what quantity of vaccine of the zithiomas? 197,000.
197,000.
Yes. Do you have closing inventory for the
Yeah.
vaccine for the zithiomas? Do you have
Yes,
closing
sir.
inventory? See it here. The
We have
anticipated inventory level as at 30th June, which is the end of the quarter, because we are asked to prepare based on quarter. Inventory of zithiomas, see it, 150, 500. This is the closing, or this is here. This is the closing. The opening is what? Say it here. Inventory of zithiomas, 200,000 kg. That is the opening. So you can now apply that. You will now say what? Add what?
Add opening.
Add closing.
Okay, add closing. Yeah. Then last
Add closing
opening.
inventory. And the value is what? 150.
150, 500.
When you add, the result will be what? Should be 347.
347, 500.
Then what will you do here?
Minus opening inventory.
Let's opening inventory. The result is what? Is 200,000. I just show it to us now. 200,000.
147, 500.
So the result will be what? 147.
147, 500.
Yes. So this is the quantity you have to purchase, isn't it?
It is.
So what will be the money value? What is the
Multiply
price?
5 naira.
5 naira. Where is it in the question?
Additional information.
This is it. Extracts of standard cost card. Vaccine the COVID as follows. Direct material zithiomas 10 kg at 5 naira per kg. So when you multiply this by 5 naira, you're going to get the monetary value. That is material price. Material price per kg is what? Is 5.
5 naira.
It's 5. So when you do the multiplication, you have what?
737, 500.
You have 737, 500. 737,500. Is this clear?
Yes, sir.
Fine. So now, looking at the additional information, there's a statement about sales, sales, which is a confusing one. That sales expectation for the quarter ending 30th June 2021 are as follows. Okay, this is it. All right. Assume that the sales of vaccine the COVID and purchase of Zithromas will be evenly spread over the 3 months. It means once you know the total sales for the quarter, you divide it by 3, right? Isn't
Okay.
it? You
It
divide
is
it by 3 because it said evenly what?
spread.
Evenly spread. So the point is this. The sales for the quarter, the overall sales for the quarter is what? Is this, right?
2,375,000.
Yes. So now what will you do? Because it is evenly spread,
Okay.
you say sales. Sales will be equal to what? 237, 2375 thousand divided by what? How many months make a quarter? 3 months.
3.
Divided by 3 months. So the result will be what? It will be
791,666.7.
7. There is still a statement about sales in the question. A confusing one too. That assume sales of, yes, evenly spread. Yes, there is another one. Where is this statement? Okay. Sales expectation for the quarter. Okay, this is it. Suppliers of Zithromas give 2-month credit, isn't it? When you are
Yes,
buying your raw material, instead of you paying immediately, you pay
immediately.
after 2 months, isn't it?
It is
Whereas customers take 1 month credit. That is those you are selling to. You are giving them what? 1 month
1
credit.
month.
So what will happen? This sales figure you have here, what will happen to it? This sales figure, if I'm buying in April, when am I paying?
April, May, June. April, May, June.
No, you are giving me 1 month credit now.
Okay. May.
May. Then if I buy in May, when will I pay?
June.
Fine. I'll pay in June. So now the sales for the quarter will be what? The sales for the quarter will be what? The sales for
Multiply
the quarter will have
791.
it. Let me show you this way. April. We have May. We have what? June,
June.
right?
Yes,
So
sir.
the spread, the sales for the whole, based on the statement we have in April, we are going to make a sale of what? 791 666.7. Still in May, 791 666.7. In June, 791 666.7. But based on that statement, the sales in April will be due in what? They are all credit sales. Credit sales
May.
will be due in May. So you have it here, 791 666.7. The sales in May will be due when? In June.
June.
791 666.7. So when you are computing, when you are calculating, this one is just a working. Let me put it in red. You are not taking this into cognizance. Now, do you have any receivable brought forward from previous from the question from previous quarter?
Yes.
See it. Receivables. Receivables is related to what? Your debtors.
Debtors.
So it was brought forward. You have to acknowledge it here. You have to acknowledge it. Let's bring it here. Receivables. It was brought forward, so we recognize it in the month of April. Receivables. The value is what?
500,000. 500,700.
700. So what will now be your total collection from customers in that quarter? Your total collection from customers in that quarter will be what?
500 or 700.
2,084,033.
Total collection from customers in that quarter would be 500, 700
Plus
plus what?
791. 791
Plus
666.
791 666.7 plus what?
791
666.7.
791 666.7. So the total will give you what?
2,084,033.4.
033.
Yes. So we have it as 208, right?
Yes.
Or
033.2.
0.4. So this is what will go to your cash budget within that quarter. Within that quarter. So very quickly, purchases. What is the story about purchases? Purchases from the question. In terms of our suppliers, that suppliers of the commerce give 2 months, right?
Yes.
Give 2 months. Give 2 months. Is the value too evenly spread?
Yes.
Is it evenly spread? This is
Yes.
it. Assume that sales of vaccine, the COVID, and purchases of Zithromas will be evenly spread. So you get that now. So now purchases. 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 The total value of purchases is what? From our budget. Purchases is what? Is 737.
737.
See it here. See it. 737 500. 737 500. Since it will be evenly spread, divide by 3 months, right?
Yes.
3 months. The result will be what?
245
245,833.3.
245,833. So same thing we've done for sales will happen here. Your supplier is giving you how many months credit?
2 months.
2 months.
2 months, fine. So we have it April. We have it. We have May. We have what? We have June. So when you spread the purchases throughout the months, you have it as what? Purchases in April is 245,833. In May, 245,833. In June, 245,833. But take note, what is the credit purchases?
2 months.
2 months.
Credit purchases. The one in April will be due when?
June.
So we only have that. Others will be carried forward to the next quarter. That is what the question says. We are only dealing with 3 months. So do we have any creditors brought forward?
Yes.
No.
Yes,
Let's
to
check.
creditors. Suppliers of
Receivable creditors. See, it's 153,000.
Okay.
So we have it as creditors brought forward. The value is what? 153,000.
153,000.
So your total, the whole collection within that quarter will be what?
153,000 plus 24.
Plus 245,833.
So we have it as 153,000 plus what? 245,833. 833. So the total will be what?
398.
98. 833.
Will be the total. We said it will be what? 398.
833.
833. So you can see that. So let's move to labor. Labor. Your production will determine your labor, right?
Yes, sir.
How many units are we producing?
1.
How many units are we producing?
190. Go back to that place we prepared the budget.
So we are producing where is it? Let's go back there. 19,700, right?
Yes, sir.
So your labor will be based on your production.
Yeah.
So labor cost budgets. We have it as what? To start. Let's say
97 times 2 multiplied by 6.
so we have it. Production. Production is what? 19,700. Now, how do you determine the labor cost? Do we have any information regarding that in the question?
Yes.
Direct labor is what? 2 hours.
2 hours.
What? At 6 naira per hour.
Uh,
Okay, fine. So now we have it as this. The labor hour is what?
2 hours.
Labor hour is 2, right?
Yes.
So this 19,700 multiplied by 2. The total production hours will be what?
39,400.
Total production hours will be what? 39,400. Now, what is the rate per hour? How much are we going to pay overall now?
It's there.
6 naira.
Rate per hour
Yes.
is 6 naira. Let me say multiply by 6. Somebody can just do direct multiply by 12, but let's show the breakdown. So we have rates, that is total labor rates. So labor costs. The result will be what?
236,400.
236,400. So with all these workings now, you can prepare your cash budget. Ma, where were you having issue?
From that evenly spread and the opening and closing inventory of
But it's now
production
clear,
and
right?
yes.
Fine. So you can prepare your cash budget now. Let's see what we can do regarding that. Cash budget. You know your cash budget, you have your cash inflow, right?
Yes.
Cash inflow. So what constitutes your cash inflow from what we've solved now?
The
Sales.
answer you got from the
sales and the
sales and
purchase.
the purchases. Sales and purchases. Sales will be inflow. Purchases outflow.
All right. So collection from customers. That working. Collection from customer
Okay.
is an inflow within the quarter. Within the quarter, where is it? Yes, this value 2084,033. You get. So those are the cash inflow within that quarter. Within that quarter. So we have it as 2084,033, right? So this, I think this is the only inflow within that period. So we have total cash inflow. Total cash inflow, you can tag it to be A, is what? Is 2084,033. So the next is cash outflow. Cash outflow. Cash outflow. What are the various cash outflow we have?
Payment to suppliers.
Very good. Payment to suppliers. Payment to supplier. What is the value? What is the value? Let's go and see. Payment to suppliers. We have what from our workings. Payment to suppliers. That is that purchases. Payment to suppliers, yes. Where is the working? So this is it. Purchases. 398,833. 398,833. What next again? What are the other outflow? Can you try? Labor costs.
Okay.
Labor costs. The cost you pay for labor is what? Labor costs. This is it, right? Labor cost budget 236,400.
Okay.
236,400. What other thing? Check the question. What other thing?
Yes, other expenses.
Yes, how much is it?
200,000.
200,000. Let's locate it in the question for those that want to watch this again.
Additional information VII.
Very good. This is it. Other expenses are paid immediately in cash and are estimated to be what 200,000 naira for the quarter ending date. Yes, so we have it as other expenses. Other expenses, the value is 200,000. 200,000. So the total cash outflow will be what? Total cash outflow will be what? Total cash outflow. That will be tagged as B. Will be what?
835,233.
835,233. 835,233. Good. So what will be the net cash flow?
Net cash flow
Is
1,248,800.
833,148.967.
That is A minus B. So you have it as what?
833,148.967.
It's
That is
1,248,800.
1,248,800. So it is 2,084,033 minus 835.
1,248,800. Okay.
So, do we have opening cash balance? You know, in cash flow, you
No.
always
No opening cash balance.
so opening cash balance. We just show it. Opening cash balance is nil. So your closing cash balance will be what?
Is
1,248,800.
800.
Closing cash balance is 1,248,800. So this is the major part students find difficult in this question. So every other thing is what you can solve. The income statement. Let's just show the income statement. Let's see how it will work. Income statement. That is B. Any question for those of you participating? But in case you join late, you might need to watch the video again to get certain things. The income statement for the quarter ending. Income statement for quarter ending 30th June 2021. So the income statement you have it what as what? What are the components of income statement? What are you trying to achieve? First,
Revenue.
we should have our sales or revenue. From the question, your sales is what? Or your computation?
Sales is
See it here. Sales. You know, in this now, you are not looking at maybe credit or cash sales. Do you understand?
Okay.
Unlike the cash flow, you know, cash has to do with cash flow has to do with cash. You understand? But this, in this regard, you are looking at the overall sales now, not segregating. So that is the income statement. So once you get that, the next is your cost of sales. How do you determine your cost of sales? The cost of sales.
opening inventory, purchase.
The opening inventory from the question is what?
2,300
At what rate?
at 62.
62. So the value will be what?
1,258,600.
Yes. So do you have the materials you purchase for production? What will be the value? Your production now.
It's I think 19,700.
Multiply by
Production multiply by what? 62.
okay, 62.
So the value will be what?
1,224,400.
So when you do the addition, you have what?
Have 2,480,000.
So what next are we to do?
Closing stock.
We're closing stock. That is, we have to less our closing stock. The value of closing stock is what?
15,000.
15,000.
Multiply by what? That is in units.
62.
So the result will be what?
930.
Should be 930. So once you do the plus and minus, you now have what? To get your gross profit. The addition and subtraction of these.
1 million
1 million
550.
550.
So here you have 1,550,000. So to get your gross profit now, to be what? Your gross profit will be what?
825000.
82500. So what are other things now? Coming to your P&L parts, your expenses part now. What are those expenses?
Other expenses 200,000.
Other expenses,
200.
200. Other expenses, 200,000. Which other thing will come here?
Depreciation
Depreciation.
Why didn't we apply depreciation in our cash flow?
because
It's not cash flow item.
it's not cash flow. It's not cash movement
It's not
type
real
thing.
cash.
Very good, very good. So depreciation value is what? 55,000. So when you add this, you have what?
255,000.
255,000.
You have to less 255,000. So your net profit will now be what?
570.
570.
Net profit will now be 570,000. So that is what the question wants you to do in with regard to the calculation part of it. And we are talking about benefit of cash budgets. You know,
So
cash. You said
that's 62.
yes. You don't know where we obtain it from.
I know, but from 50 and 12.
Yes. Now, for
Yes.
you to produce a finished product, the finished product, what are the costs involved per
Okay,
unit?
both cost of material and cost of labor.
Yes, you put all those costs together for
Okay.
you to be able to have a finished product. That is why you are using 62.
Okay.
Yes. So, talking about the cash budget, the benefits of cash budget as part of the question. When you talk about the benefit of cash budgets, the benefit of cash budget is that it helps to forecast our cash inflows and outflows by ensuring that we have liquidity for operations. And one thing with it is that it prevents cash shortages, because once you monitor your cash inflow and cash outflow, there is no way you will run out of cash.
Okay.
There's no way you run out of cash. So it helps a business to support planning for investment or financing needs, and it enables better control over expenses. So in simple terms, I would say it also helps in evaluating credit policies and timing of payment. It tried to also help organization to maintain financial stability and solvency. So you can check your study pack to see what they put down there for you as an addition to what I've said. So the question is also asking us of let me go back to the question and see that sales are often considered to be principal budget factor of an organization. I've emphasized this in the course of the class. Can anybody speak about this? Sales being the principal budget factor.
Because sales is a principal budget factor, because it's from sales that other factors are determined, like production budget, material usage, and purchases is determined from sales.
Yes. So by the time you see all these in the exam, you should be able to answer. Yes, because every other functional budget have its roots. So sales is the principal budget factor because it determines the level of production, purchasing, staffing, labor, and other operational activities. So all other budget depends on the expected sales volume. So it sets the foundation for resource allocation, for capacity planning, for profitability in terms of forecasting. So it is the important starting point for budgeting process. That is the sales budget for you, and that is why it is termed as the principal budget factor. So thank you very, very much for coming
Thank you very much, sir.
online.